Hey everybody, happy Saturday. Thank you all for coming. This is where we try and recap where we are, where we've come from the weekend, what actually happened. So the crypto market cap is about just under 2.1 trillion. It's been like flat for, most of August. And August has not been good, has not been kind to us. Dominance around 55% for Bitcoin. Fear and greed fell yesterday from 27 down to 25. That's not good either. And ETH is about 2,600. And Sol's about 150, and let's jump into everything that's going on. And of course, this is not financial advice. We have some interesting nuggets in here too. And thank you to everybody on Patreon. First of all, this week in crypto sucks. Bitcoin, though, not too bad, only down 0.5%. Whereas Ethereum beat Bitcoin up 0.5%. Sol down 9%, really sucked. Binance up. Binance is only the only dark green spot for the whole week. So well done, Binance. And a lot of stuff kind of mixed all over the place. No real pattern that we can hang on to here. Let's do a quick Marty tour of the world, find out exactly what's going on. I love this graphic from him. And you can see here, Bitcoin is hanging in there, but it's lagging gold. Compute is up. The dollar yield is down, which is good. Stock market is all-time highs. Energy all-time highs. Oil kind of middle of the range, and Tesla kind of middle of the range too. So all in all, not perfect. In fact, whoops, slight mistake there. This is the current one. Sorry. It's a little bit similar, but the other one is from a few days ago. Gold is breaking out. That's the big story here, the second chart. Compute up, dollar yield down, stock market near all-time highs, like I mentioned before. Oil, middle of the range. Tesla, middle of the range. Energy, all-time highs. But the most important thing, though, is Bitcoin is lagging. Bitcoin has had a sucky couple of weeks because of what I call the 5Gs, where, the Goxes and the Grayscales and the Genesis and the government selling, Germany, US government. They're the 5Gs. And we have another 5Gs that are potentially waiting in the wings, but they'll be released sometime soon. Let's jump into the next story, the Bitcoin black hole. A couple of cool things about Bitcoin. First of all, this just took me by surprise. This is from Crypto Slate. But between 18th of July and the 14th of August, an astonishing 285,000 Bitcoin was added to the supply by long-term Bitcoin holders, marking a notable shift in market dynamics after months of decline. And you look into this data, it's the largest single month increase that has ever happened. And this trend isn't just a fleeting phenomenon. It's inextricably tied to the ETF holdings, of course. That's changing everything, like we've mentioned many times before. But the institutional confidence might be at an all-time high, but the price has not really followed. It's kind of weird, but we'll dig more into that in a second. First of all, where we are right now in the cycle, great chart by Charts BTC. I hope they didn't mind. I added a big black arrow to show you the black line of the current cycle, which is 2022 to 2025. And the bottom was about 15.5. Now, the yellow line is 2018 to 2021. And the blue line, 2014 to 2017. A lot of people believe the black line is closest to matching the blue line, the 2017 cycle. I hope so too, because that means it could be a bonkers market. The other thing to note about this chart is the red arrow, where the election is 5th of November, 2024. That is currently, if I calculate correctly in my small brain, 79 days away. And historically, Bitcoin went up from this level over the next 79 days, historically. And then after that, it goes up a lot. The question is, will November and December be bonkers? And will we start creeping up in September, October ahead of it? That's what remains to be seen. Let's look at the ETFs now. I did a little calculation for August. They have bled out 128 million. We saw big selling ahead of the carry trade crisis. But it's been rebounding pretty fast. There is, however, one thing that is not good. And that's the reason it's bleeding so hard is because of this. The Grayskunk bleed is unreal. In 152 days of nonstop bleed, they averaged out 130 million a day, and it's not slowing. In fact, yesterday was $73 million out. 73 million after bleeding $20 billion. And despite their mini Grayscale trust, it's not slowing down by no stretch. Now, there is a piece that people sometimes get confused. They say, oh, but so much money has gone into the ETFs. How come the price isn't up? Well, it is up. But the important thing to know is it's combating the bleed out of Grayscale. So if you look, I say that about 4.65% of all Bitcoin is now in ETFs. But you've got to remember the net flow is only 1.55%. That's 305,000 Bitcoin, which is only a little bit higher than Michael Saylor's bag. But the key thing here is this is 305,000 Bitcoin on top of this crazy bleed of 20 billion, which is a similar amount almost as well. So the ETFs have taken the 20 billion from Grayscale and added another 305,000 Bitcoin. And I didn't calculate the price because the price of Bitcoin varies. The amount of flow does not correspond exactly to amount of Bitcoin, but I can calculate that. I just didn't have time today. So that's where we are. Very important to know. Let's look at a little bit of the L1s, L2s for the week. We'll get into some crypto stuff and then some macro stuff and some fun car stuff maybe. Here you can see Tron wins the week on the 7-day price change. Well done, Tron. TVL, total value locked. SUI wins. Stablecoin volume, Matic wins. Aptos, daily active users, wins daily active users on the 7-day. And daily transactions, Aptos as well. As usual, if you have a lot more users, you have a lot more transactions. But we got some new, really cool metrics to show you too. So first of all, the net flows, it's a different kind of black hole. Over the last month, we saw something very interesting happen. Not only a huge bleed to the tune of nearly $1.4 billion out of Ethereum, but big inflows into Arbitrum to the tune of about $600 million and about $200 million into Solana over the last month. And then Base, number 3, right there, is really turning heads, doing a lot of exciting stuff. While we're on the subject of Ethereum, though, before we get into more data, let's check out the ETH ETF flows real briefly. Once a week, we'll touch on this. You can see that they are down 421 million since the ETH ETF launched, so still not positive and very far from it. And as usual, just like Grayscale, the ETH thing will just bleed out over time. No matter what they try and do, nobody cares. Nobody's putting money even into the ETH mini trust, which has a much lower fee. All the money is very clearly going into first BlackRock, second Fidelity, third is that Wisdom Tree, ETHW? Yeah. The rest don't exist, but they are beginning to chew up some of the dumpage from Grayscale. And Grayscale made a fatal mistake, thinking they could leave their fees as they were, and they just left a bad taste in the market, and everybody just dunking out. Now, this is other interesting news because we have to look at the amount of users, the amount of adoption in crypto, and it is going to the roof, going to the moon even. But what's interesting about this from Milk Road, yellow marks the level of crypto adoption where the prices of crypto peaked. There's about 37 million users, monthly active addresses. We talk about that a lot here. The monthly active address for crypto keep on going up, but we haven't had highs since 5 months ago. What's going on? Well, I was going to call this video lags because Bitcoin price is lagging gold. I always say Bitcoin loves a crisis because gold loves a crisis. Gold is sniffing out a crisis, but Bitcoin is facing too many sell-off headwinds, but they will all soon be flushed, we hope. But if Metcalfe's law works, crypto is severely undervalued right now, considering the amount of adoption. Let's look at a new metric. It's chain usage. From the team at Artemis. Remember, some chains are just all stablecoins, like Tron. Some are just all social coupons, like Near. But it's best to have a mix of different types of activities. So, for example, this was interesting. So you can see 2 million users on Solana yesterday. Binance, 895,000. That's up from 600,000. So well done, Binance. Base, 522,000. Base has more users than Ethereum at 399,000. Sui nearly has as many users as Ethereum at 373K. Polygon has fallen off the face of the earth, 321K. They were 1 million users not too long ago. And Arbitrum is 150K. One thing I do want to point out, though, just little data you can tease out of this. Infrastructure users make up all of the Sui user base, whereas on Solana, infrastructure users are only 1.4% of the user base. So it's very bizarre to see what happens, but you do want a chain to have a lot of DeFi, a lot of wallet-to-wallet transactions, payments, infrastructure, bridges, NFTs, stablecoins, tokens, you name it, all that type of stuff. You want a big mix, breadth of dApps is key to any chain. Now, another thing, piece of FUD that always floats around, and this is from Justin Bonds, and people say, oh, all of the Solana transactions fail. No, only 9.7% of transactions fail. And for many chains, 30% of transactions fail. So it's kind of normal. So it's not what people say. It's like, oh, all the transactions fail. No. And of that 9.7%, the majority of those are bots that get rejected for spam type transactions. So just fighting a little bit of FUD here. Also, this is interesting. For those who want to get paid in crypto, guess what? The Dubai approves crypto salaries. And it used to be an old saying back in 2021, pay me in Bitcoin. But this 2024 ruling highlights the court's evolving stance on digital currencies. Dubai and Singapore are the two top crypto centers of the world. And by recognizing crypto as a valid form of remuneration, the court now has a precedent. So now, if you want to pay people in crypto, you can do that. But there can be a dark side to that as well, which we'll talk about in a second. But before we get there, I always try and weave the tapestry and join the dots between all these different activities. This is something I always track. Where are people going? Where is the best place to live? If you have money and you're living in a autocratic regime that has high taxes and crime and stuff, you're just going to get the hell out and go somewhere else. So I track this heavily. This is the millionaire migration so far from Urani in 2024. Stunning developments here. Of course, Canada and US are always positive because the Chinese, those 15,000 Chinese, I bet you 7,000 of those 15,000 ended up in North America. Then you have 9,500 millionaires leaving the UK so far this year. Nearly 10,000. I guarantee you, a lot of those, maybe 2/3 of those 10,000 have gone to Dubai. Dubai is up 6,700 millionaires. No wonder it's all Lambos and G-Wagons and all those fancy things. Even the cops there drive Cybertrucks. But UAE, 6,700 new millionaires so far in 2024. And now they're going to be paid in crypto. And many of them are crypto millionaires as well. They're fleeing to crypto-friendly places. The autocratic regimes that are against crypto are losing these important people who also are very wealthy. Not a good thing for a country. Now, this was a token. Everybody asked me, how come you're not buying Athena? How come you're not buying Athena? And 5 months ago, it was taking over the world. You could get 40% return on your asset from staking, whatever they were doing. I don't know. But I dug into it, and my first signal was the crypto compendium score, 1.6, which is literally in the bottom 10 percentile of the top 500 cryptos, where 98% of them are complete trash. Okay, that line across the top, that's the minimum threshold of anything you'd want to touch ever in crypto. If it's below that line in the crypto compendium, walk away. Sell it, do not buy it, whatever. I have to stress this because this thing has a direct correlation to token performance. So this labeled it a pig out of the gate. But there's more. There's more that has happened. First of all, we're speaking about employee benefits. These are employees with extreme benefits. The Eigenlayer, another play, EtherFi, Eigenlayer, not Athena, but Eigenlayer faces controversy over employee acquisitions and getting access to airdrops early. So again, be careful. Be careful with chains that are doing kind of shady things behind the scenes. But back to this one, Ethena. It was marked as one of the biggest losers so far this year. And there's a top 3 reasons why Ethena, sorry for the slides being out of order, the Eigenlayer stuff was supposed to pop in somewhere else. So anyway, it will not affect our story today. But Ethena is falling because of negative funding rates for assets like Bitcoin have turned sharply negative, reaching the lowest levels at sometimes minus 10 to 15% annually. That means Ethena must pay rather than receive periodic payments, severely impacting its yield. They were offering 40% yield out of the gate, even 120% at one point. Everyone's saying, why didn't you buy it? Why didn't you buy it? Well, now it's just 4% and was even 0% in recent days. So again, if it sounds too good to be true, it normally is. And this huge reduction in yield has stalled growth and adoption. And remember, as I always say, if something stops growing, especially in an emerging space like crypto, it is dying. Very important. We have chains that had 3 times, 4 times the number of daily active users in the bear market than they do today. What does that tell you? They're dying. So hope is not a strategy. And the final piece here is also shrinking supply. The USDE, which is a synthetic dollar, not a stable coin, has shrunk by over $500 million. Now I think it's about 3 billion. Anyway, let's check out the Athena chart. See how that looks. Whoops. Ooh, this is ugly. Yeah, nothing but down all the way. So be careful, everybody. Don't get excited by things that sound too good to be true, because they're never sustainable. And that's just the way of the world. But there's more. Coinbase is killing it. Absolutely killing it. Coinbase Base, that's their layer 2 on Ethereum, now has 11 million monthly active users. Arbitrum and Green has tanked off, and you can see there's almost a perfect inverse correlation between Arbitrum and Base. People are doing more on Base. And remember also, everybody, please, 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 do not run out and try buy Base token. It doesn't exist. Anything you see called Base is fake. Okay, it's a proprietary token from Coinbase to use in layer 2. But there is no token, I should say. It's proprietary layer 2 on ETH. And Worldcoin, another fizzling down fast news, is down 87%. That's probably one of the best Orwellian spy coins, where they scan your retina and put your identity on the blockchain. There's nothing creepier than that. Anyway, looks like that wasn't a success either. But there is another success, kind of like Base. This is the end times vehicle, and love it or hate it, a lot of people hate it. But all of a sudden, this thing called a Cybertruck is not only the best selling vehicle over $100,000, which is the super luxury class, for several months so far in 2024. That's up there with the Ferraris and Lambos and Porsches and Mercedes and BMWs and Audis and all these different types of cars. There's even American SUVs like Navigators and stuff are all north of $100,000. But this is now a high-end luxury vehicle with high-end rich vehicle buyers, because people do like, at least some people with a lot of money, like its unique design, advanced technology, bulletproof capability, etc., etc. Also, not only is it the top-selling $100,000 plus car, it's also the number 1 selling electric truck, surpassing the F-150 Lightning and Rivian R1T. So again, and by the way, I think it's probably popular because some people are stacking gold right now. They can perhaps sense some end times, and no safer place to be probably than this puppy. Anyway, let's talk about a bit of macro stuff, because a floating tide will raise all boats. You can see here, this is the global liquidity from Bitcoin Strategy platform. And you can see we're still making all-time highs. Now, although it may not sound like a lot, but year over year, I calculated global liquidity is up 3.69%. Remember, we're talking nearly $100 trillion. All right, so call that over $3.5 trillion is how much has been added to global liquidity just in the last 12 months, and it's about to go into high gear. Speaking of liquidity, the other side of that equation is rates. And the market did overreact a little bit to the unemployment print we received a few weeks back. But the base case now sits at least a 25 basis point, again cut in September, maybe 50 basis points. We're not sure. The Fed want more data. They want to burn this thing to the ground. But then there could be as many as 4 or 5 rate cuts by January or even before. So either way, rates are coming down. And why? Why do they have to come down? It's pretty simple. We have another new all-time high. I'd never like to buy this stock. Global debt reaches $315 trillion. Okay, this is a house of cards up and to the right. That thing started 220 just in 2016, 7-8 years ago. Now it's already $100 trillion more. And to even fathom how much $100 trillion looks like in stacked dollar bills, it is about 8 football stadiums full of stacked $100 bills on, what do you call those wooden crate things, platters, whatever. Anyway, what this means as well, the other thing I want to point out is that 333%, which is a beautiful number, is extremely high, and to me, it's very alarming. This means that the total global debt is more than 3.33 times the value of all goods and services produced on the planet in a year. What that basically tells you, unless we have a hyper multiple step change increase in productivity, this will never be repaid. So anybody taking on this debt, you're never going to get repaid. So, unless of course we get absolute abundance in robots, but that's a separate conversation. And a little bit of tying it back to GDP and growth and everything else. This is a dismal outlook. All right, we're already at 333% of GDP, and GDP is not growing the way it should. These numbers are horrific. Let's just look at 2024 expectations. Germany is flat, basically. Japan, flat. Italy, less than 1%. UK, 1%. Canada, 1%. France, 1.2%. And the US, 2.3%. If you can trust any of those government numbers, that's up to you. And then look at the trend from the past. Again, pretty flat. The trend for the future, 2025, US down to 1.8%. Canada up to 1.8%. UK, 1.3%. Japan 1.2, France 1.2, 1.1, Germany and 1% Italy. That is nowhere near fast enough to make payments on the debt that all these countries have. It's a debt spiral. That's why we Bitcoin, because fiat is going to zero, because they're going to keep on printing like there's no tomorrow, and global liquidity is going to go to the moon. And that's all she wrote today. Thank you all for coming. Hope you enjoyed the story. And thank you as well to Team Tesla, Sean Donnelly, and K8, and everybody here in the chat. Have a great Saturday. Now it's time for me to go work on the Q&A for tomorrow. I'll be back at noon, so it's about 22 hours, noon Pacific tomorrow, with the top questions from the week. And there are some, they get harder every week, but they're super interesting as well. And I love doing it because I learn with the team here as well. Thanks, everybody. Have a good night.